What's up, everyone? It's Scotty with MoneyVest. So markets here once again a little bit more flat and slightly down. It was quite a volatile day because the markets did rally in the first half of the day, pushing higher and then started rolling right back down. Tomorrow is the big unemployment numbers. I will be live to cover the jobs report. So make sure that you do subscribe and of course join our Discord and our Patreon if you want to connect with us, with our MoneyVest community. I would really appreciate that. And of course, links are going to be down below for our Discord and for our Patreon. You get access to all the alerts, all the Discord channels, including the trade alerts, buy and sell alerts, options alerts, more specifically options, because I've been selling calls because of the markets being so high and so overbought, and now those call options are doing really well. These are my Tesla calls that are up 57%, and these right here are my Amazon calls up another 51%, and they're both of them doing really well, close to $500 profit, and I will be closing them out here either tomorrow or the day after. Or basically on next week, on Monday, considering how much they are now up. My target's usually around 60 to 70% profit is what I'm looking for. So again, if you want to get access to all these alerts, you can literally learn and find out what I'm trading, what I'm buying and selling, along with a lot of other benefits, including the research, analysis, and private videos. Link's going to be down below. And also do connect with me on Instagram. My handle is going to be CastWRP. I do share a lot of interesting stories, polls and strategies and videos and behind the scenes. So again, link's going to be down below. Would love to have you on board over there as well. So when it comes to the market, so NASDAQ closes lower for a fifth day, its longest losing streak since October of 2022. So again, it's not a question of if, it's a question of when. Something we have talked about. This was a 9-week of consistent rally for the market. So this is a very normal thing with the markets pulling back, and we are seeing some profit taking. NASDAQ dipping a little bit over 0.5% on the day, with S&P down about 34 basis points and the Dow very flat. So once again, a little bit of that rotation out of tech, out of growth, over to other more defensive, more stable sectors and parts of the market. So tomorrow, like I said, unemployment numbers come out, and I will be live to cover those numbers. The recent performance on Wall Street comes in stark contrast to how the market ended in 2023. The S&P 500 ended last year up more than 24% while enjoying its best weekly win streak going back as far as 2004. But Stephen Whiting, chief investment strategist of Citi Global Wealth, doesn't believe that this recent pullback will have any long-term repercussions on the market as well. Whether any of this lasts, I wouldn't really look too much into this in the last few days as mattering very much. It's really a statistical coin toss. In fact, he thinks that S&P 500 could end the year around 5,000 level, which would indicate more than 6% upside from here. So I'm also kind of like very similar. I think that long term, and as we know, the entire year, markets have a lot of potential to continue to move higher and rally. But of course, right now we're seeing a little bit of a pullback considering how overbought and overextended we were. And a lot of the liquidity is coming out of the more big tech and more core positions and kind of rotating out of other parts of the market. So Microsoft, Apple, Google, Amazon, all of them selling off, with Broadcom here also pulling back, NVIDIA pushing up, Meta pushing up, AMD, Visa, Bank of America, Wells Fargo, healthcare, and some of the more medical devices and staple stocks pushing higher here. So this was the entire state of the market. So healthcare, financial definitely pushing up, with other parts of the market, consumer defensive, real estate, utilities, materials, technology, everything else pulling back, with 1 week performance. Again, a little bit of a split market with majority of sectors selling off. And in the last 1 month, we've got healthcare, comm services, of course, financials. We've got almost all sectors, all 11 sectors in the S&P 500 are green at the moment. So going over to futures and commodities, what you'll notice again is lean hogs. We've got ethanol, sugar, palladium, crude oil, Nikkei, silver, cocoa, wheat, all pushing higher, with feeder cattle, natural gas, and canola and orange juice more specifically selling off, with Bitcoin here just a little bit over 43,000 and Ether just over 2,200 as well. So coming over to the market, Bitcoin here consolidating sideways. There's a lot of news developing for Bitcoin with its spot ETF, and of course Fidelity with Grayscale Bitcoin Trust. A lot of momentum, a lot of sentiment, a lot of optimism that's kind of building up for Bitcoin in 2024. So if we do see a breakout above this, next target is going to be 48,000 to as much as 51,000 for BTC. And of course for Ethereum, we're just consolidating sideways at a resistance, just moving sideways. 2,000 is going to be that support, all the way up to as much as 3,500 next resistance target if we end up breaking out above this red rectangle. Talking about crude oil prices, just consolidating sideways at that resistance. So we have been on a very nice consistent downtrend. So this right here has been the overall downtrend of lower highs and lower lows. And right now, of course, we're just trading sideways and consolidating in that range at the moment for crude oil. And the next target and resistance going to be at $81 per barrel for crude oil. And of course, support level is going to stay put at $66 per barrel for crude oil. So lots of consolidation. And again, that is going to be that resistance level to watch at 73. Talking a little bit about the 10-year Treasury yield. So getting a little bit of that rebound back up. So close to 4%. And that's obviously causing TLT, TMF to pull back a little bit. And I do believe that yields are going to stabilize, in my opinion, at least somewhere around 2.5% to as much as 3%. So there's not a lot of downside for 10-year treasuries, at least not at the moment. Now, this only happens if the Federal Reserve achieves a soft landing scenario where inflation is trending down and they are able to cut interest rates maybe 3 to 4 times, maybe even a lot more. But 2.5% to 3% is where I see interest rates, more specifically the 10-year treasuries, kind of stabilizing, unless there is a very severe recession, unless there's a very significant crisis that leads to even cutting rates further down from the Federal Reserve standpoint, back down to maybe 0, 0.5, or close to 1%. So that's where I believe interest rates are going to settle in and stabilize around 2.5% to 3%, unless there's a significant crisis or a recession, which leads for the Fed to cut down interest rates even further. Talking about S&P 500, so continues to drop. And again, it was quite an interesting day where the sellers basically stepped in, and we were as much as 47.27 and then sold right back down to close pretty much at the low of the day, down 34 basis points. So again, RSI MACD showing clear signs of a reasonable pullback, and we have already seen from our recent highs, S&P down a little bit over 2%. So next target and support at 4,600. I wouldn't be surprised if there's another 1.7, close to 2% sell-off in the S&P, bringing down to 4,600 and then kind of stabilizing, finding support, and then making that move back up and recovering back up to 4,700, possibly back up to new all-time highs. This right here is where I would be looking at some long trade opportunities, because the RSI would be lower, MACD would have also been sold off quite aggressively, and we'd be down from our all-time highs, once again, a little bit close to 4.5%, close to 5%. So that's a reasonable pullback and a dip for the market, and that would be a nice dip within the context of this uptrend. So 4,600 is where I kind of reset some of those long positions. Of course, the lower the better, but that would be the first level to watch for S&P. NASDAQ here, very similar. 14,000 is going to be that support, and from its recent highs, it is already down a little bit over 4.5%, close to 5%. So 14,000 is going to be that support, and 13,800 is going to be that next level of support, kind of also this gap that we have for the NASDAQ as well. So a very nice, reasonable pullback with the RSI and the MACD coming down, and that next support really is going to be down to 14,400 to as low as 13,800 for the NASDAQ. Talking about Apple stock, and Apple here selling off even further, down about 1.27%. I think there is opportunity now for us to go long on Apple from a trading perspective. Of course, from a long-term perspective, my fair value is going to be a lot lower than where it's trading at the moment. But yes, from a technical perspective, considering that it's now come down to oversold levels, RSI just dipped below 30, MACD's been selling off as well. I wouldn't mind starting a very small trading opportunity position on Apple at 180. And of course, trading that back up to as much as 190. That's a reasonable 5.5%, close to 6% upside, or possibly up to 198. That's going to be that all-time high, close to 10% potential profit. If it ends up breaking down below 180, that's going to be the stop loss, get out, and reset the trade at 165. So that's going to be that next target. And that's really what it comes down to when you're assessing the risk reward. We in fact know, when it comes to trading, we know that there's going to be a reversal. There's going to be a rally. There's going to be a pullback. The only question we don't know is when. When's that going to happen, right? Is Apple going to bounce off of 180 now? Or if that's going to do it in the future? Or if it's going to break down, come down to 165, and then rebound back higher? So that's exactly why it's so important to keep a very tight risk reward and also trade with a positive, very strong risk reward ratio. So in other words, if you're risking 1%, you're at least looking to make 2% or more in that trade. Okay, so have a 2-to-1, 3-to-1, 5-to-1, 10-to-1 risk reward ratios, which kind of enables you to have more losing trades and still end up making money over the long term, because that's how math work. You want to keep your win percentages. Of course, if you have a very high win percentage, 70-80%, that's fantastic, but nobody's going to be able to achieve that every single time, right? It's very difficult to consistently achieve a 70, 80, 90% win rate. So in order to kind of be successful long term, is that you have to understand that my win rate is going to be lower, but if I take higher quality, higher positive risk reward trades, then over time I will be profitable, even though I am more wrong than I'm right. That's the beauty of understanding these risk reward ratios. Of course, a lot of that is detailed out in more sort of in-depth analysis in the technical analysis course, so link's going to be down below if you want to take that. But 180 is going to be that support all the way down to 165 for Apple. Talking about Amazon, and Amazon here selling off quite aggressively, down a little bit over 2.6%. So no doubt about it. That's exactly one of the reasons why my calls are now up a little bit over 51% on Amazon. So we'll be looking at closing them out very soon. Next support really is going to be down here. This is going to be that next sort of green rectangle, that support level to watch. For Amazon, sitting roughly at 135. And of course, right now the price is coming down. RSI, MACD, both are coming down as well. So a little bit of a breakdown below 148 for Amazon. Talking about Tesla, and Tesla here also selling off, down a little bit over 22 basis points. So selling off and breaking down below this level here, and $240 is going to serve as a resistance and next target and support inside this green rectangle for Tesla. That's going to be inside here between $200 and $212, $215 per share for Tesla, and of course resistance all the way up to $269 for the company. So that is going to be that resistance and that target, of course, support level in the low 200s for Tesla. That's where I could see myself maybe once again dollar cost averaging a little bit more into this company. Talking about NVDA, and NVIDIA here just consolidating sideways, up a little bit over 90 basis points for the most part, still in that range of consolidation here, going back and forth. And again, support level right now, intermediate support is going to stay put at 451 down to low 400s for NVIDIA. Advanced Micro Devices rebounding a little bit, back up to over 136. I did trim a little bit of my position before the big sell-off. 130 is going to be that support right now, all the way down to $112 per share. So this right here is going to be that next level, that next target, in case we see a little bit of a bigger breakdown for Advanced Micro Devices. And of course, moving averages are doing really well, with the 200 SMA sitting roughly at around $112 per share. So that is going to be by far the best and the biggest support for Advanced Micro Devices. PayPal here, on the other hand, continues its sell-off, down about 30 basis points. Support level is going to stay put at $56 per share. So this right here is going to be that level to watch, with the resistance staying put at $65 for PayPal. And of course, we saw a very nice breakdown from this uptrend for PayPal, but that is going to be that support level to hold on to for this company. And Visa here consolidating sideways and up over 63 basis points. So support level is going to stay put inside this green rectangle, sitting roughly $245 to $250 per share. It's done really well, of course, kind of still trading at an all-time high at the moment, and resistance is going to be at this higher high, sitting roughly at 265, with the support level, of course, inside this green rectangle, sitting roughly between 245 and 250 for Visa. Talking about Meta platforms, and Meta here continues to trade inside this uptrend of higher highs and higher lows. So seeing a little bit of a bounce back up of 77 basis points. Very nice, consistent sort of reasonable dip and then rallying back higher, reasonable dip and then rallying back higher. So very much in the context of this uptrend of higher highs and higher lows for Meta. So this right here is the overall trend. Support level, as we have already talked about this, sitting between $315 and $330 per share for Meta. Talking about Netflix, and Netflix here on the day also slightly up over 94 basis points, close to 1%. Resistance is going to stay put at $485, $490. So this right here is going to be that level to watch, with the support level staying put at $450 for Netflix. So previous resistance acting as a support for Netflix, and a lot of consolidation sideways in that range. Google here, on the other hand, selling off a little bit over 1.6%. Not a surprise considering the consolidation pattern in between that range, and we were approaching that resistance here for Google. So of course, starting to see a little bit of a breakdown below this level, and support level is going to stay put inside this right here. That's the 200 simple moving average, sitting roughly at 126 for Google. And finally, we got Microsoft, Enphase, and Costco. And Microsoft here selling off down over 72 basis points. Again, this is going to be a more important support at 366. If you do end up seeing a breakdown below this, the next target is going to be 340, and that's obviously going to create the markets a little bit more momentum for the markets to come down even further. So 366 is going to be that support. Next level down to $340 per share for the company. And finally, we got Enphase and Costco. Enphase here on the day down a little bit over 3.7%, down $118. Once again, of course, seeing a lot of underperformance at the moment as Treasury yields and interest rates in general have started to recover back up. So we're starting to see some momentum back down with the RSI MACD also coming down. So that's not a surprise. This is exactly what we were expecting, and this is very, very normal, and it's coming down to that support in the low 100s once again. That's exactly why I was selling calls, which I did close out for a nice 60, 70, 50 to 60% profit on Enphase. And finally, we got Costco, and Costco here selling off also on the day. I think it was pulling back, and last time I checked, and it's been obviously overbought, overextended, so actually pushing up over 0.5% once again. RSI MACD also showing signs of some potential downside and weakness to continue for Costco moving forward. So hope you guys enjoyed this video and a complete update on the markets. Bottom line is that we are seeing some momentum lower for the markets in general. And I do expect that to continue over the next maybe a few days going into next week. Tomorrow is unemployment numbers, so I will be live to cover the labor market, labor jobs report. So make sure that you do tune in for our live stream. Make sure that you do check out the links down below for our Discord, for Patreon. Again, that 16% annual discount is available for a couple more days for New Year's. And of course, the Instagram Cast WRP. Definitely do check us out there and connect with me there over as well. As always, happy investing. I'll see you all in the next video.